And now it's time for FinTech and payments news from your inbox last night.
Welcome to Your Inbox Last Night, the podcast where we skim the FinTech headlines so you don't have to. Today is March 7th, 2025. And before we dive in, let's start with a fun fact about money. Celebrating this Women's History Month, did you know that it wasn't until the 1960s that women in the U.S. were legally allowed to have their own bank accounts without their husband's signature? That's right. Back then, if you wanted to stash your hard-earned cash, you needed your hubby to do it. Fast forward to today, and women are leading some of the biggest fintech companies out there. And only one female founder is being sued by a giant bank for being quote-unquote manipulative. So, good times. All right, let's get to it. We've got a jam-packed episode with everything from Visa and Mastercard's stablecoin chess moves to AI-enhanced mobile shopping, and of course, some juicy regulatory drama. Buckle up. First up, it wouldn't be a FinTech news roundup without some regulatory curveballs. Let's break down the latest in legal and policy moves that could shake up the financial world. CFPB supervision drama. The Consumer Financial Protection Bureau is having a bit of an identity crisis, with internal conflicts and miscommunication making it harder for financial institutions to navigate compliance. Imagine trying to follow the rules of a board game, only to have the rulebook rewritten mid-game, every week. The overdraft fee battle continues. Consumer advocacy groups are rallying behind the Biden-era CFPB overdraft rule, fighting to keep banks from charging excessive fees. Spoiler alert, banks don't love it. Big tech payments get a gift. The Senate has decided along strict party lines that a CFPB rule regulating payment services offered by big tech companies is no longer necessary. And the fact that banks and credit unions offering the same services are regulated? Nah, that doesn't matter. The lawsuit against several banks for ignoring fraud in payment app, Zelle, was dropped earlier this week. So now let's kill that rule put into effect by the CFPB in November. But Apple, don't get all full of yourselves yet. The bill still has to pass the House, I guess. Bank of America's CashPro gets a facelift. The bank is rolling out improvements to its business banking platform, focusing on better customer experience in managing their treasury, trade, credit, and investments. Rolling on now, as we always do, to the popular industry news sources. Google's AI shopping makeover, Chain Store Age, reports that Google is integrating AI-powered image generation into mobile shopping. In wide rollout for Google mobile app users in the US, Vision Match lets consumers describe any garment they have in mind and uses generative AI to create a few images of what it could look like, as well as of similar shoppable products. In addition, starting the week of March 5th, 2025, Google US shoppers can virtually try on and shop beauty looks with multiple makeup products using augmented reality. Wow. Savings accounts, the new criminal playground. According to Finextra, fraudulent mule account activity is way up in savings accounts. Turns out, criminals like old-school banking too. The savings account data suggests that money launderers and their mules are attempting to disperse activity across a wider range of financial products. This as U.S. government oversight is on the decline. It seems things like addresses not matching with identities, multiple applications using the same address, and the use of false identities, artificially created synthetic IDs, are up by 17% already this year. No digital wallets win in the Senate. Digital Transactions reports that lawmakers just made life easier for mobile payment providers. Looks like Apple Pay and Google Pay aren't going anywhere anytime soon. Klarna's big IPO move. The Paypers reports that Klarna is gearing up to file for a $1 billion IPO. Is the BNPL bubble about to get even bigger? Let's check on the AI in FinTech report. AI is doing its usual thing, disrupting everything in sight. Here's how it's shaking up FinTech. AI-powered content creation. Opus is reporting on a new AI Reframe tool designed to help marketers change between landscape and portrait clips in under 5 minutes. This may not seem like a huge deal, but for those of us making videos all day, every day, trust me, it is. AI in Payments and FX Trends. FXC. Intelligence released research highlighting key trends in payments, including the growing role of AI in cross-border transactions. AI is basically turning into that overachieving student who aces every subject, including finance. Their cross-border data is current up to 2023, and the report is comprehensive. Well, he hasn't been here in a few days. Let's see what Mr. X has for us this morning.
Hey there, friends. Nice to be back from the cage those doge guys were keeping me in. Hey, I kid. I joke. Well, now, sugar, let me tell you something. Visa and Mastercard ain't just sitting on the sidelines watching the stablecoin rodeo. Nope. They done slapped on their biggest belt buckles, strutted into the saloon, and started pouring drinks for all the crypto cowboys. And what's on tap? A whole lot of stablecoin adoption, courtesy of your old pals in plastic payments. Now, I've been around long enough to know that when the card networks start dancing real close with the digital dollar crowd, they ain't doing it out of the kindness of their hearts. No, sir. These boys see the writing on the wall. Fiat's getting clunkier than a rusted-out Ford, and folks are tired of playing musical chairs with settlement times. Ain't nobody got patience for T+2 anymore, when stablecoins settle faster than a hot knife through Texas butter. Word around the campfire is Visa's been busy rolling out pilot programs left and right, flirting with the idea of using stablecoins like USDC to grease the wheels of cross-border transactions. And Mastercard, well, darling, they ain't about to let Visa two-step all over them. They're out here, linking up with crypto firms, testing out blockchain rails, and figuring out how to take their pound of flesh from every digital dollar that moves. Now, don't get me wrong, I love a good free market play as much as the next oil tycoon, but let's not pretend these old boys ain't got an angle. If Visa and Mastercard are pushing stablecoins, it's because they know there's money in them. Regulation, oh, that's just a speed bump on the highway to monetization. They'll cozy up to policymakers, shake a few hands, and before you know it, stablecoins will be swiping through their networks, just like old-fashioned greenbacks. So what's the takeaway here? If you're a bank, you better start paying attention, because them card networks are coming for your lunch. If you're a payments nerd, buckle up. This stablecoin game's about to get real interesting. And if you're me, well, I'm just gonna sit back, sip my whiskey, and watch Visa and Mastercard do what they do best, collecting tolls on every road to the future. Y'all stay sharp now.
And that's a wrap on this episode of Your Inbox Last Night. We covered a lot. Regulatory chaos, stablecoins taking over, AI running the show, and even a fintech glow-up for Klarna. If today's episode taught us anything, it's that finance never sleeps, and neither do the people trying to regulate it. If you liked what you heard, hit that subscribe button and share this with a fellow payments nerd. Until next time, keep your transactions fast, your fees low, and your AI-generated shopping carts full. Catch you in the next episode.